Gold prices are high, junior stocks are not. Welcome to Kitco Roundtable. I'm your host, Michael McCrae, here at the Precious Metal Summit in Beaver Creek, Colorado, hosted by Snowline Gold. Paul Harris, always a pleasure to do this with you.
Hi, Michael. Good to see you.
And we have with us David Erfle. He is with the Junior Miner Junkie. He is also a Kitco contributor. David, great to have you with us.
Always great to talk to you. Thanks for having me, Michael.
We are near the end of the 4-day Precious Metal Summit. Attendees are mostly precious metals and developers that are here at the show, and I would describe the mood as being discouraged. I think that's fair.
A little desperation in there too.
Gold prices have been relatively high over the past couple of months. So we've seen them at the 1900s level, yet the GDX is down 3%. We won't even talk about the juniors right now in terms of what their stocks are trading at. As a matter of comparison, the NASDAQ is up 30% over the same period. David, we've seen past slumps before. You've been in this industry for a long time. How is this slump different?
Oh, where do I begin? First, I think we could compare it to the slump of late 2015, when the GDX and GDXJ had gone down 85% over the previous 3 years, and basically the gold price was threatening to go below $1,000. I remember the mood was, okay, gold's going below 1,000, almost like it was like the mood when it was going towards 2,000, okay, gold's going towards 2,000. Of course, when that side of the boat gets so heavy, it doesn't happen. It didn't happen. The gold price bottomed at 1045, and the miners started to take off in early January. But this time, the miners are weak with a strong gold price. I mean, if you want to have some of these gold stocks look like the gold price, you have to turn their charts upside down. It's an amazing dichotomy. And of course, the reasons for that is because of the inflation that has permeated throughout everybody's lives. And basically the gold price going sideways and doing nothing, and the stock market continuing to go higher. So there's no need to be defensive. There's no need to have gold as far as investors are concerned now, especially since they're getting, 5% on a T-bill. So, we got that. Those are pretty much the big differences.
Yeah, I've heard that point regarding inflation. That's been the way. So margin compression again. This was out of Rodrigo Barbosa. He was estimating over about the last two years, you're seeing about a 20% elevation in terms of costs right now. So one of the pieces that are discouraging for gold miners right now. Paul, talking about yourself, do you see differences with this slump compared to past slumps?
I think one thing that really stands out is this slump is, harder, longer, and louder. This bear cycle for the equities particularly has been going on sort of 10 odd years. So it really is grinding people down. It's grinding down the investors that, everybody's told to sort of stay long, and people are getting punished for that. But it's also grinding down the management teams. People here have commented to me that they love the sector, they love what they do, but the joy's just gone out of it because it's relentless. The endless calls from disgruntled investors about when's it going to turn around, when's the stock going to tick up. It really is getting to people. So I think one of the outcomes of this may be a lot of the CEOs have got grey hair. So a lot are starting to question why they're doing this, why they need to do it. So this could prompt a wave of retirements and, okay, I'm done. I'm going to go and sell my yacht.
I'm glad that you here because people are waiting with bated breath. Paul and David, how does this turn around? David.
No pressure.
Start with you.
Well, it turns around with basically people getting more defensive. There's not very many reasons to get defensive right now. The AI stocks look like they're trying to start another wave higher. The stock market looks like it's gonna keep going higher. So there's no reason to get defensive and no reason to buy gold stocks. But as far as the gold price is concerned, you mentioned it. It continues to stay above 1,900. It's basically had a monthly close above 1,900 for 6 consecutive months now, and you wouldn't know that by looking at the gold stocks. But as far as how is this going to turn around, basically what's kept up the gold price is central bank buying. It hasn't been investor buying. ETFs, we continue to see ETF outflows. So we need to see the investors start to get a little worried and scared about the coming recession. We need to see the investor maybe starting to lose faith in central bank policies. I think the Federal Reserve giving up on their fantasy of a 2% inflation target. We saw the PPI come out today, and it was the biggest gain in almost a year. And we've seen the dollar go up over 0.5%, yet the gold price went up a little bit. I think people are starting to realize that, hey, this same Federal Reserve that told us that inflation was transitory for a year is trying to tell us that they can get inflation back down to 2%. Well, we don't see it. We see the oil price going higher. We see commodities continue to go higher. So I think it's the inflation for longer. That's going to get people to think, hey, maybe I should get a little bit of gold. Paul?
In terms of the equity, well, I'll say what David said, but what he said. No, but seriously, I think in the equities, I think it really comes down to an M&A cycle really getting going. And when the bigger companies or the mid-tier companies start taking out some of these really attractively valued smaller companies, that could kick-start something, because there could be some, for a long time there hasn't been any sort of tangible gains, and that could, if there are premium, there could be some gains, and people starting to get that message and fear of missing out kicking in. And maybe there could be a situation where once the first major or mid-tier company starts buying someone, there could be the sort of fear of missing out. And the others will say, okay, we need to start buying the things we like before somebody else bids for them. That could happen, but it could be a bit of a long shot.
Or a major discovery also, like something like what kickstarted the late 90s, like a Voisey's Bay.
I don't know, because there has been a couple of things like that with Snowline and Collective. They've done really, really well. They've attracted capital, but that hasn't really spread out, or the shadow of that hasn't really spread out and benefited anybody else.
I think the answer is that the gold junior is a little bit more humdrum than we actually believe. I mean, there's a belief around gold. This is very counter-cyclical in terms of like what's happening with geopolitical concerns, what's happening with inflation, and we do see that with 1900 gold. I don't think the move has been that spectacular, but it's pretty good that we have right now. But the fact is that these gold juniors are still speculative assets, and they rely on there being animal spirits. They rely on people being able to take a bet. And this is a risk-off environment, and the Fed is stamping on everything right now, ensuring it is a risk-off environment. So it's going to be that way. And it's just, again, when people come back and then they say that, they feel confident in, taking a bet, then at that point, then we're going to see a turnaround.
I want to sort of follow up on that, Michael, because I think the speculative nature of the juniors is amplified now, because they're even more speculative than they used to be, because most of them, I imagine, there's 230 issuers here. I imagine most of them are hard up for cash, and everybody knows they're going to have to refinance very soon. There's not the money available, so they're not going to be able to refinance and do meaningful work. It's going to cost them a lot more to finance. In terms of dilution or whatever, warrants or warrant and a half or 2 warrants. So they're even more speculative than they are under normal circumstances.
Key takeaways from the show, David?
Well, so far, a big key takeaway is something Paul touched upon is M&A. But you come to this show. Usually I'm hoping for an M&A wave to begin after the Beaver Creek and Denver Gold Forum, where all these guys come together, and there's usually a big M&A announcement, and it starts a trend, and then there's more M&As. But as far as the junior space, we don't want to see any of these companies taken over right now, because they would be take-unders. Mm-hmm. I mean, the last high-profile takeover in this sector of a mid-tier buying a junior was when B2 Gold bought Sabina, and that was basically a take-under. I mean, not very many people made money on that. And then let's say the small portion of people that small portion of investors that did manage to buy Sabina near the low and make a decent profit and held their B2 shares. Then B2 had a dip when Mali concerns came up. So a lot of these companies that have de-risked their projects now they've got multi-million ounces in the ground. They've de-risked their projects toward a feasibility or even a finance decision, a credit construction and finance decision. They need to raise more money in the equity component than sometimes 3 times their market cap. So what needs to happen in M&A? I think a lot of these smaller juniors that are de-risking these larger projects with the smaller capex, they need to come together. We need to have a large company that has several projects, 150 million cash in the bank, like a U.S. big board listing, to attract capital into a company that has more liquidity. There's a lot of these companies, they don't even, the liquidity has dried up in this sector. I mean, if you take a look at the TSX Venture liquidity, it hasn't been this low since the gold price was at $250 an ounce. So there's just not a lot of interest. There's not a lot of liquidity. It's basically us resource investors trading amongst ourselves now. So, you got to be aware of the sharks on Bay Street and Howe Street playing their games with these shares around financings. And if you're an exploration company that is not even at the feasibility stage yet, and you've got less than $10 million in the bank, and you announce these great drill results, or you announce positive results in this environment, your stock is going to get sold because these investors know that you need to raise money, and you're probably going to have to raise money with a warrant. So they're just going to wait. If they like what you're doing, they're just going to wait for the finance and to get the warrant.
Paul, key takeaways.
Following on from that, there's a lot of financial herd out there. So it's becoming a very good moment in time for the royalty and streaming companies because they've got all the cash in the world and there's not a lot of equity out there. So I think a lot of CEOs are going to be tempted to turn to those sources of money. Now, that's all well and good, but the caveat to that is when you encumber a project with a royalty, you often kill the level of interest from a producer or mid-tier. Royalties equal red flags to them. So if your ultimate aim is to sell your property to a bigger project to a bigger company, putting a royalty on it can be and often is a big flag. I've been speaking to some corporate development people here from senior mining companies. They say it's a red flag. It enables us to really simplify the number of companies we do look to take out. So long way of saying dilution is the solution. And it's this thing that CEOs really, really resist, rightly or wrongly, but it's perhaps better, more sensible to take the dilution and hope for better days in the future rather than encumbering your project with a royalty or a stream and really killing off any future takeout possibility.
I'm going to ask David Erfle and Paul Harris what their key trend that they're going to be watching for over the next 12 months. But first, a word from our sponsor, Snowline Gold. The Snowline Gold, ticker SGG on the TSX Venture and SNWGF on the OTCQB, is making waves with their focus on a district-scale greenfield gold discoveries in Canada's Yukon. With 330,000 hectare land package and exceptional leadership team, they are well on their way to unlocking Canada's newest gold district. Snowline's 2023 exploration program continues to top the charts with industry-leading drill results. The latest hole returned 2.5 grams per ton gold over 553 meters at the Valley Discovery, making one of the best drill holes ever drilled in the Yukon's territory in its 125-year history. To stay updated with Snowline Gold's exploration program, visit snowlinegold.com, ticker SGD on the TSX Venture. David, what's the key trend that you're looking for?
Well, we touched on M&A. I've talked to a lot of smaller microcap juniors, that they need money. The market knows they need money. And they're looking to either monetize projects if they can or merge with equals. So I think we need to see this merge of equals take place in the junior space. We needed to see it during the last down cycle in late 2015. I thought it was going to happen. It didn't because the gold price took off, financing window opened, and all of a sudden, all the lifestyle companies got financed again. So a lot of these lifestyle companies need to go away. And these juniors need to consolidate and merge with equal companies that are de-risking projects that are close to each other or have other synergies. This needs to happen.
Paul, what trend are you looking for over the next 12 months?
It's not a trend that I'm looking for, but it's something I'm expecting to see. I think a lot of companies have worked through their treasury. I was going to say blown through their treasuries, but that's perhaps unkind. They've worked through their treasuries. They have done good work, good drilling results, economic studies, etc. But I think we're at a moment in time where that's coming to an end because the cupboard is bare, the piggy bank is bare. So I think we're going to see a big reduction in news flow or meaningful news flow. The difference between the haves and the have not is, in terms of bank balances, is going to become abundantly clear, and that will manifest itself in a reduction in news flow of meaningful news.
David Erfle, Paul Harris, this is always a delight.
Same
Thank
here.
you very much.
Thank you.
Thank you.
My name is Michael McCrae here with Kitco Mining at the Precious Metal Summit here in Beaver Creek, Colorado. Subscribe for more content from our show.